Good evening. This is the Elliot Wave update for the NASDAQ 100 and the S&P 500 for Wednesday, March the 15th, 2023. You know the old saying, beware the Ides of March. That goes in both directions when it comes to the market. The wild and woolliness continues. So today, we received the PPI number, the initial. Well, before I do that, I'm going to start here on the 4-hour chart. We're going to fill in the blanks because to talk about, the PPI number, I have to come over to here, and we had a lot of wild ride within. So beginning with just the 4-hour picture, because I wanted to show that the intermediate wave B for right now remains in place for me. And now I have a minor one. So we're in that C wave, the intermediate C wave. It's consisting of 5 waves of minor degree, of which 1 and 2 are complete. And we're really wrestling. The markets are wrestling with the beginning stages of a third. And it does appear that when you see these last gasps, you see these pushes, it begins to remind me of the last gaps. It's like, no, I've got to have this, and go and getting it for a particular day that's already going to go off board. And that's really what's happening right now. We had an expiration today. They needed higher numbers. So they started, and you can see how it all builds. And it's frustrating in a way because you're expecting an opposite move. You're getting enough news, fundamental, basically, news that affects us today, tomorrow, and the next week. And they're turning it around and buying it at the end of the day, or buying it during the day, end of the day. And when they've already given an indication that you get a gigantic sell overnight, taking the markets down, then the NASDAQ at the time, I believe, was down almost 200, goes down over 200. We get the PPI, they try to jump it, they bring it all the way back down. So we're getting this reading that, okay, we're going to pay attention to PPI, we're going to pay attention to the bank failures, we're looking at what's coming in. Europe, just in case you didn't know, the European banks, Credit Suisse, the Saudis backed out of the possible deal where they would step in and fund that bank. And so it was like, no, not going to happen. And so the banking sector within the Eurozone really took a hit. Similar to what was happening here last Thursday. Then on Friday, we got that little bit of recovery. Then today, they don't like it. So although it recovered off the lows, so it's a very difficult time because what you see happening in the market, you're like, what are they doing? And what should I be doing here? And let me just take it one step further. When you're a swing trader or a day trader, it is wreaking havoc in your trading life because it's like, what are they doing? Do I sell this, or are they intent on taking it up to next level? And how I'm getting there with that type of stuff is, again, I use, and I'm sharing with you guys. So this one's already dead. So we're out here. These are tomorrow. And we're right now at 38.94. So what comes into play? 3,900. Bing, right there. What's not that much, but it's building. So during the evening, when they come back online and they start trading them, you're going to want to pay attention to here because it's going to start to line up with what the marketplace is beginning to suggest this index will be pinned tomorrow. Then again, we also have the quarterly expiration on Friday. So I know I've been kind of standing on the milk box or just on the box saying the price movement and direction right now, our short-term direction, is totally dominated by options trading, derivatives trading, and that's across the board. We've got incredible volatility going on in the 30-year bond, and incredible volatility and price movements that are extremely lucrative. And in like one contract, because it's such a large contract. The 30-year bond contract is $31.25 per tick. And so one full point is $1,000. So the market can get really wild and really woolly very quickly. And right now, I'm focusing on looking at this to determine where we're going to go. Well, they tacked on over 30 points into the close. Actually, I'm sorry, I got to keep doing this, but I'll go down to that 5 minute, open it up. That was it. So once again, 12:55, I live on the West Coast, to the close. So 3:55 to 4 o'clock Eastern. They took it from 12,309 here in the NASDAQ up to 12,392 in 5 minutes so the bell could ring. I was like, you went from, no, we're not going to take 12,300, like, oh, we're going to take 12,400, but didn't quite make it. Seriously. Like, what is that? And this is what came before it. We're selling off. You know, a lot of sellers coming in on the sell side, and the imbalance was showing to the sell side, and then this shows up, and they just take it. So when you get things like this, it throws a wrench. It keeps it in two forms. Yes, at the time when it's happening, it's very impulsive. It's like bing. And it was, they were moves. If you were there and you could play them, you could make $300, $400, $500 in a flash. You're like, bing, oh, thank you very much. Put a nice cap on your day. Conversely, I've seen them where it's like they zip and they zap right after. So in any case, the trading remains wild. So I've made, back here on the NASDAQ, I've made some adjustments. It truly does not change the trajectory of my count or the position of my count. It rearranges the degree and the internal labeling and does clean up what I felt were a lot of problem areas, particularly one at today. It's like they went up and they went above the level that I didn't think they should, that should have completed. At that time, I was counting it as a sub-minute wave 2 or sub-minute wave 2. And we're dropping back down into thirds. And it's like, no. They ran it back up and moved it to a new high above that. So this then all is an extending on itself, but it's like, well, what is it? So I relabeled. And so what I have is a double ABC. ABC, which was pretty clean, and then we came slamming down, came all the way back. Well, X, ABC. They're fast, they're sub-minute, which are small. But when you're there in that 5 minutes, or you're there watching on a 1 minute chart, it's pretty wicked. And again, because they're moving so fast, and it's a future, and it's $5 a tick, and it doesn't move in ticks, it moves in dollars. So you can bid, say, for example, 12,415 and a quarter or a half or 3/4 or round the next round number. There are 4 ticks to every dollar, but suddenly it'll just go in dollars. When they come in looking for things and they're going to buy futures, you can just see they will take whatever they can get because they have to buy 10 or 11 or 12 or 15. And you can see that move the market very quickly when it's all ones. So, I mean, you could simply do the math. If there's only going to be a one lot at every quarter and they move at $10, well, you can do the math on what's trading at each tick approximately. If there was volume being offered, it wouldn't bebop around so much. In any case, let's review the chart. On the NASDAQ 100, coming down. So we had, this should have a C on it, but that it's an A, B, C for the 2. So we had an A, B, C for the 2. But I took those internals off, so I'm not going to leave that there, but it is the B wave. And there should be a label here like the 1. Where did that one go? There it is. Nope, I don't need that. Sorry about that, but I do want it to show. Let's move him out of the way. There he is. So -1, -2. We're looking for a total of 5. We knew 1 and 2 were done. We're in the third. This I adjusted a little bit. I was counting this possibly over there, and then we get, or somewhere. I put it, and now I've moved it and changed the internal into a 5. It's ugly. I know it is. And we all know it is. But there's very little else that's going to work. And then cover this. So we leave that as impulsive, finishing a 5. Not really diagonal, but hey, it is what it is. So the 5 and the minute 1. Now we have a minute 2. I'm putting it there because I believe this is pretty well cleaned up, finished. It may have one more little pop if I'm looking at it. A, B, 1, 2, 3, maybe 4, 5. We're on the hourly. So it has come up, moved above that high. I don't want to see it above that high. So they're pressing on 12,400, and then they can move 90 points in 5 minutes. It's like, oh, come on, don't blow it. Don't take it above 12,475. Please don't do that, because then it really does throw a lot more into a weird position. All right, so what would the expectation be? Well, here we have our, whoops, that's not correct, actually. Let me remove that one and got that, and I'm going to go from there to there to there. And we're just going to use the current high. We can make adjustments from there, but this is just giving an idea of where this all could go. If we're looking for the minute third wave, we're inside the minor third wave. So we have 1, 2. Cleans it up all the 1, 2, 1, 2, 1, 2, doesn't it? So we have 1, 2. Now it's a cleaner start for the third wave. It should be a clean, nice 5. Bam. So that's what I'm now looking for. And the situation truly has not changed that much where we would be looking for, oh, they're going to break out. There is talk about the Fed not raising. There is talk about the Fed at least giving a pass for this month. But we have to understand it's not because anything is working to fix the existing problems. This is important to remember because the market's going to get screwy, wild, and woolly, and it's a setup. And yes, there are algorithms that'll go and just force things, but that's not one of them. Because without the clarification, newer traders are going to assume, well, interest rates, if interest rates go lower, you buy the market, right? And it's like, okay, generally, I would say yes. But in this particular case, I would say no, because the outside of it is rotten. So if they did actually lower the rate, I would be stunned. So the Fed, in all honesty, who meets next week, is in a very difficult spot because their decision will ultimately either lead to further harm. And I don't mean by the market turning and going down. I mean by them just letting this go on forever. They can't make a decision. They don't know what they're going to do. And we've got a market that just doesn't have the clues on where to go. Or these algorithms just keep us in this range, loving 4,000 in the ES, loving 12,400 to 12,500 in the S and in the NASDAQ. It's all there. It's like, yep, that's our comfort zone. We'll just hang out right here. Well, in the larger scheme of things, so to speak, that's not what most people are looking for, because we are taking into consideration what's happening in various areas around the globe. We cannot downplay this bank failure. I doubt they're going to be able to say it was just the 3 banks. We're okay. Everything's fine. And it's like, how can you say that when this bank, which had a very large deposit, they had a lot of deposits, billions and billions of dollars worth of deposits, go bust? Then we had another one. Again, lots of money. They become big, medium-sized banks, but lots of money. Silicon Valley Bank, big. And who banked there? Big. So the scurry, We're okay. Got it caught, took care of it. To me, it's just like, be quiet. Let this all settle out. Don't tell me that this is all fine now. We fixed it. Well, it's like, doesn't work like that. Unless you brought in this treasure trove, just armored car after armored car of cash. Here's our cash. Here, go and just multiply and give enough to everybody, because this is we got it all here. Don't you worry. That is just not it. So I don't know. Then Europe joined in, as I said when I began. Credit Suisse. Uh-oh, this is a big Swiss bank. The Swiss aren't known to go bust because of a bad investment or a bad trade, right? Here we are. And this sends the European banking sectors to the sewer. So now it is spread. So contagion, well, it's not here in the U.S. It's like, oh, come on. We are a global economy, remember? All of the countries, we all do business with each other. So therefore, what affects them is going to affect us, and what affects us is going to affect Asia. It rolls around the globe. Excuse me. So here in the NASDAQ, I would suspect when this is done, and again, I am also suspecting that they will want to move this down. This is a window. This is a block. This is whatever you want to call it, between 12,500 and 12,800. This is just where we're hanging out day after day after day after day after day. Where the window's going to move because there will be reason to reassess, to reposition. That's coming, and that's what I feel comes next, and it'll be on the large side. So I'm continuing to look for a decline. Another day, didn't work. But I have to be honest, it was not that difficult of a trade day. These were pretty obvious when they came. And it was obvious that all you need to do is jump on. If you allowed a lot of mindset stuff to go on, you didn't participate. And then you were angry that they kept pushing. But if you jumped on and you made money, you'd be like, it wasn't so bad. And I'm being serious. So it's like, I'm not trying to be a wise guy here. And that worked on both sides. It worked to the downside. It worked to the upside. And I'm being honest with, it's like in the NASDAQ, because that's the market I trade. You just kind of catching on. It's like, oh, all right, I'm in. And then you get in, because a lot of times I'll throw a bid out there and I don't get hit, and it just kind of keeps on going. And I do not chase it. But when you are able to catch it within seconds, it was $1,000 trade on a one lot in the NASDAQ. I'm not kidding. One lot in the NASDAQ. That's how kind of fast it was moving at particular points this morning. So it is possible. Again, if you're position trading, the words that I would give right now, the encouragement that I would give, is that the market is crazy and you're seeing a lot of adjusting, which is causing the moves that we're getting. So they're also trying to just stay prepared. It's just making an adjustment intraday because we have options that expire every day. Where are we going to close today? This is where you got to pin it. Okay, so I got to deal with that if you are a position trader. So that is not the easiest job these days, but it's not impossible. You just have to remember, you got to keep trading. You must keep trading. If you like your position and you're going to let it roll out another day because you have more time, you still can trade to manage the position. So again, these are the levels, and this would be for the minute wave 3. And right now, very high level, we got 12,218, 3A2, which is just going to be a breath, just to stop to take a breath, 12,100. That's because we spent time there today. We break that, 12,023, 12,006. They kind of group together. The first being 0.236 of the larger C wave coming down. So then we break. And I'm looking for a break of 12,000. And I really believe that the start of the move because I do think we are going to get a sock in the face that keeps getting stopped by algorithms. That there's going to be a day, there's going to be a time where we got enough that's turned, and it's just like, you want to step in, you'll be just overrun, filled, and just gone. So that's the type of situation because we've been here for such a long time, I think the springs are very tightly wound, and I don't think the springs are tightly wound to go up. So I think they're tightly wound to go down. And sooner or later, they will break. And it'll be like opening up a little bit of a floodgate, I believe, at least for the first 1,000 points. 12,005 down to 11,005. Should go pretty fast. All right. Moving averages, hourly, boring, nothing. 50s, flat. So the 20 and the 8 and the 4, they're moving. They should. But bigger than that, they didn't care. Okay, over in the S&P, it is the same story. It is the same picture. It is the same moves created by the same algorithms that are trading the spiders, the SPX, and the ES. All three of them, folks, are going to go together. All three of them. And one can be aggravated or assisted by another, because the spiders are a derivative of the SPX, and so that's that price. The future is a derivative of the SPX cash market plus interest. Spiders have interest, but spiders have options, et cetera, et cetera. So a lot to unpack. Here again, I also brought into line the S&P and the NASDAQ, not exactly the same, but the same count. Now, the S&P is just slightly ahead, because if you go back over to the NASDAQ, I'm still, what's finishing now way over here is minute wave 2. Whereas here we have minute wave 2 complete, and then another 5 down to start with a sub-minute wave 1, sub-minute wave 2. So here we are still getting 1, 2 on a minor, 1, 2 on a minute, 1, 2 on a sub-minute, roll over and play dead. So I am looking for that. I'm still looking for that. But you see, I don't want to back myself into a corner with a particular count. And I will defend not only me, but just everybody else who's trying to work it out. It is a project, a labeling account in motion. And there are a lot of factors swirling around this cloud, this storm cloud. And we're standing in the eye, waiting for the back wall of this storm cloud to give us the old 1, 2 and knock this thing to the floor. So 1, 2, 1, 2, just readjust it a little bit. ABC 2, 1, 2, 3, 4, 5. Sub ABC may be done. We did break and put a slight new high in, but that's like nothing. And I imagine they're going to pee their pants because somebody forgot to buy or whatever. And I think it'll go up. So that's there, but it could be up here. It could move around. Now, where can I put some additional? Let's see. Yep. We are looking for, actually, if we were looking for, hold on. If we're looking for wave 5, we're going to go inside here. So we go from, that's a 4. And we're going to go to a little bit difficult. First, I can put this 3 on. So I don't have a 4 to attach it to. But we have 39.45, 39.59. I'm not looking for this thing. This is a 2. It can't go above there. So it's reached a pretty good level. 39.31 possibly. Then it's done, if it isn't already done. So again, I'm pretty much looking for that to give it up. And we get that larger third coming down. There, that's the one where I go 1, and then up to here. And we're going to call that the high. Oops. Stick right there. We'll call it the high. Now we're going to get a lot of duplicates there. So those are going to be areas where the market is likely going to gather. And they play until one side ticks off the other side and they push them out of the way, buyers or sellers. So right now, if we start to come off, we should have initial support, but this is again for the larger, for the balance of this third. And we have 39.19, then the internal third, we have 39.05, 38.90, 38.87. I would imagine it's going to play around there. We saw it today. Ding, 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 right in there. Imagine it'll try it again. Then we have 38.77, 38.64. So you can see that we're coming off, but we're not really plowing through. I would expect that if that truly is the end of a wave 2 and the next is up as a wave 3, we keep getting them, but they're small. That was a third. That's a third wave. Now, do we want it on this degree? Yeah, we do. We do. This one, 39.62 down to 38.60 is 100 points, basically. Yes, please, to get it started. 39.31, 38.31. Wow, takes us all the way back down to here. And guess what? 618 right there, 38.34. That's what I think should start it. Then we get a 4 and a 5, and that completes the minute third. And then we get another 4 and a 5, and that completes the minor third. So we're down, we're down, we're down. It should continue. But we're going to count it on each degree and then moving back up as we finish, right? Right now, we're doing the 1, 2, 3, 4, 5 to finish the minute, that color, minute third. Then we're going to do a 4, a minute 4 and 5, and that's going to finish the minor third. Then we'll get a minor 4 and 5, and that will complete then the intermediate C wave. So we have a lot of stair stepping to do to come down. The stair stepping up and taking most of your day back, or all of your day back, in the case of the NASDAQ, you're like, oh my God, why do we have to travel this road back and forth and back and forth and back and forth and back and forth before we realize it's not the correct value? The stock's everything. It's all about expiration. Okay, tomorrow, you know what I'm expecting. When it's going to come, we'll continue to play. Economic numbers for Thursday, initial jobless claims, import prices, housing starts, and the Philly Fed, all at 8:30 a.m. Eastern. Again, I don't think algorithms or traders are really even caring what these numbers say or these numbers do. They pick up and then they figure out how they got to do what they want to do. So, but they're coming. And eventually, I do suspect that it's going to tilt, and force the change. So that's tomorrow. We have those before the market opens. It's Thursday. Have a great trading day. Our next update will be on Thursday, March the 16th.